Bill, I'm going to start with you, and I think this is a question that a lot of people are going to start talking about pretty soon. This rise in commodity prices, what does that mean for inflation? As I just mentioned, Fed officials, they were worried about inflation during those Fed minutes. As we continue to see commodities rally, does that get transferred into higher prices for goods?
The Fed's worry about inflation really stems from the service sector. Commodities contribute a lot to some of the goods pricing, but the goods prices themselves have been holding pretty steady ever since the beginning of this year. So I think one of the things that we're worried about in the inflation side is really on the domestic services side and not so much from commodities.
All right. The weaker dollar has been a big part of that commodity story. This week, again, dollar having its best week in just about a year. If we continue to see the dollar gain, does that mean that the commodities go down? Does that lessen the risk of inflation through commodities? I know you're saying it's mostly services, but commodities certainly factor into this, especially when we're talking about something like copper.
Oh, absolutely. But then remember the other commodity, which is oil, that has really gone down, starting to go down a bit as the tensions in the Middle East start to ease off. So commodities really have a mixed bag. Also, part of the strength in the commodity market represents the strong GDP numbers that we've had in the United States, which have a 3+ handle in the latest data. So I think, again, the overall picture for inflation is one where the goods sector is holding steady, but the source of the real concern for the Fed and for policymakers is really from the service sector.
All right, Alistair, turning to you. What does this all mean for investors? Now, I've talked to a lot of different CIOs and investors, and they say kind of a rule of thumb is that when commodity prices go higher, it's a boost for emerging markets. But I was actually looking up some research. This is from Schwab. The MCSI Emerging Markets Index, it was energy and materials, commodities. Yep. 25% of it just about 20 years ago in 2005. Now it's just 10%. Yep. Does that still hold true that a rise in commodity prices helps emerging markets?
I think it does more so than other regions in the world. But within EM, you have to be very specific. So the Asian markets, I would say, less beneficial. Actually, areas like India, I would say, is a commodity importer, so it gets hit. But think about Brazil, think about Chile, and South Africa specifically. South Africa is one of the biggest miners of these precious metals, these PGMs, and that's a market I think could really benefit from higher gold prices and higher silver prices.
As we see the dollar rebound a bit, again, on pace for its best week in about a year, it's up about 1.5% this week. Does that immediately impact emerging markets, and which one of those markets are most sensitive to the dollar actually gaining?
So I think one of the most fascinating things this week is that while the dollar has gained against developed market currencies, EM currencies have actually held much stronger. So this whole dollar strength trade, I think, is more of a developed market thing. The issues in Japan and in Europe, actually in EM, they've held quite resilient. But look, if the dollar does start to strengthen more broadly based, I think it's the higher beta currencies that get hit on this. So some of the ones that I'd be more concerned about would be LATAM. You know, Mexico, Brazil, they've gained a lot this year, and also potentially areas like India.
All right, Bill, I want to come back over to you. We've been talking a lot about this record rally when it comes to gold. Gold up about 50% year to date. There was actually a story in the FT earlier today that we were seeing increasing money go into funds that are ex-US. As a matter of fact, we were just doing an ETF segment earlier, the VXUS, the Vanguard Total International ETF that excludes the US, saw some of the top inflows. Just in general, what does that mean for the U.S. economy as we continue to see money go away from the dollar and even money that goes into the equity market go away from the U.S.?
Well, I don't think money's going away from the dollar. The fact that the dollar is strengthening shows that people are really sexually investing in the United States. But I think the gold story is one of central bank demand for gold. China is buying gold like crazy. India is as well. And I think what you see is a huge shift in the demand for gold on the part of central banks as part of the reserve currency. And Alistair's spot on about the impact of commodities for emerging markets. It's a very, very important factor for them and very specific to various countries and commodities. But for the United States economy, the fact that gold prices have gone up is not so much a dollar fear story or a U.S. fear story, but rather it's a reflection of central bank demand.
All right, Alistair, coming back over to you. Something that Bill mentioned. Oil prices are easing after the Israel-Hamas ceasefire. At the same time, we are seeing some of these other commodities rise. When we're looking at what you think is the best pick when it comes to emerging markets, what seems like it has the biggest opportunity to gain in Q4? Also have to keep in mind that President Trump and President Xi are expected to meet. And so if we see a lessening of U.S.-China tensions, which doesn't seem like it's going to happen today, at least, with NVIDIA and Qualcomm, but if we do see that, are there beneficiaries? And if the tensions continue, are there beneficiaries?
So 3 markets I would highlight. One is China, because of this, the APAC meeting we have later this month. Also, another key catalyst is the 5-year plan, which China is going to be discussing between the 20th and the 23rd of October. And then outside of China, particularly in the commodity space, I think South Africa is one of our top picks as a potential beneficiary of not just a macro inflection, but a beneficiary of these higher gold prices. And then the third area is somewhere like Mexico, which again I think is a key beneficiary of the reduction in trade tensions. And if you get this rediscussion of the USMCA agreement that gets pushed forward, I think that could be a big catalyst for Mexico to outperform.
So, Bill, I want to come back over to you. That conversation we're having about the dollar. In all fairness, the dollar index is weighed against a basket of other currencies. We've seen weakening in the euro and weakening in the yen. So that is part of the dollar's rise. But I want to hit on that point. If we see a weaker yen and a weaker euro, what does that mean in your mind for the U.S. economy and for a lot of companies that export over to Europe or to Japan?
It certainly is a mixed picture. And I think one of the things that we have to keep in mind is that a lot of the industrial economies like Japan, like Germany, are really doing quite badly in terms of economic growth. So when the dollar is strengthening, it's strengthening because the U.S. economy is doing well, the financial markets doing well, and people are wanting to invest in the United States and take money away from these other markets that are doing less well.